Good afternoon, everybody, and welcome to this edition of our Ask the Experts for Tuesday, 22 June. My name is Carl Cavalingua. I'm the market analyst over here at Think Markets Australia, and it is a pleasure to be joining you today as I put you in control. The content of today's presentation is really all about what you want to talk about, and I'll give you a quick technical and fundamental as best I can. Before we do that, we'll talk about the Think Markets difference, which is substantial $8 flat rate trades, your own holder identification number, unlimited phone support, no hidden platform or subscription fees, and of course a world-class trading app. 5 fantastic reasons why your next ASX share trade should be with Think Markets, and I'll give you 5 more. If you're new to the Think Markets family, get signed up and trading before June 30, not that far away now. Your first 5 trades are on us. Okay, as I said, the agenda is over to you. We've got some questions coming in already. HE8 is an interesting one from John. Let's see if we've got any fundamentals on it. What you can't see is me. Sometimes if I'm looking over to one side, it's because I've got multiple screens going over here, and we're going to change that one from Fortescue to HE8, and we'll see if we can get any fundamentals on that one. I don't think we will, because I know it is a smaller capitalisation stock, but we certainly can head to the chart and have a look, and we are talking about Helios Energy, which rings a bell. It's come up in my scan a number of times over the last sort of 12 months that I've been working for Think Markets. Actually just gone over 12 months now. And maybe I've covered it in Think Technical at some stage, I don't know, but it certainly has come up from time to time. Looking at just zooming out here and getting an idea of the broader trend, I might even go to the weekly chart and have an idea as well of what we're looking at. I'm looking also at volume for interest with these smaller stocks. We want to see some volume and some interest, and preferably at key breakout points as well. So at least we've got a little bit of interest going on here, so people do know it exists. That's a start. It's a bit flat more recently. This is definitely going to be an issue through here, but let's see how close we are to it. It looks like we're getting through that level now, and that level there is 18 cents. So once again, a smaller stock, and certainly in price, and I'm guessing also in capitalisation. Let's extend that over, and that's potential resistance zone. It was down and out, wasn't it, John? Not that long ago, about a week and a half ago. We have had some volume in, so maybe there was an announcement there. Maybe they've had a find. It's certainly good to see an appreciation like this on some volume. That's a good start, and very shallow pullbacks. So there was a little pullback through here. And often, if you're able to get something at 12 and you're up 4 cents very quickly, 30%, some people might want to take profits. It looks like very few people want to do that, and they're happy to continue to buy, even in the face of what should probably be a pretty significant point of supply. So with the lack of the pullbacks, I think that's encouraging. Short-term trends obviously turned up. We don't have much of a long-term trend to speak of. It's quite flat at the moment, so I can't give you much with respect to that. But look, the little bit of technical analysis I guess I can do on this is that very short term looks quite prospective. The volume and the lack of the pullback being the main components to that. Look, if I had it, I think you'd be compelled to hold it just on the basis that something is going on. If I didn't have it, I'm not sure if I'm a buyer based upon the fact that there's not enough of a long-term trend to tell me that there's enough big money getting involved at this stage. But it's kind of a short-term buy and a 50-50 on the long term. I don't have any fundamentals because it's a small cap stock. It won't be a complete exhaustive fundamental analysis here because we've only got 30 minutes and I've got lots of people that obviously want to talk about their stocks as well. So if we just go HE8, ASX announcements is the quickest way to find it, and you're going to get the top hit there. It's going to take you to the ASX website. You're going to get a little bit of a chart up here, which gives you a short-term view of what's been going on. You get some information here. Typically, if the company is profitable, then more of these will be populated. We get some trading volume there and how their revenues and profits are going, and we can see that I'm actually surprised that there's a little bit of revenue there. It's probably interest on bank interest. We can see profits are spiralling downwards at this stage. It doesn't mean it's not a buy, it just means that it's a resources company and they're spending money, hopefully, to make money. If you click on See All Announcements, you'll be taken to all of the announcements the company has made to the stock exchange. And what I'm looking for here, they've obviously had a recent issue, so they've raised some capital, and that is good to know if you're not in it, because you prefer not to be hit after you get in with a capital raising. Often I'll check on those and see what's going on, but this is the one I'm looking for. Here's the quarterly activities report for March, and you'll get a bit of an idea of what they're doing. So we did have a capital raising here for $11 million, which is a good whack of dough, to be fair, at 12 cents a share. Okay, well that's the point of that last rally. Less interested in this stuff at this stage. I was looking for the statement of cash flow. So I want to see how much cash they're burning versus how much cash they've got. But I'm guessing with the $11 million, that's not really a problem. I'm surprised they didn't have it in there. You may need to agree and proceed on that. That's what I'm looking for there. Sometimes it's called a 4C, sometimes it's called a 5B, and we're burning about 800 a quarter, so 3.2 to 3.5 a year. But the raising of the $11 million, which is here, gives them 3 years, a 3-year runway to actually do something with it. Okay, there's not much else I can do on that without actually looking at exactly where the drilling results and all that sort of stuff, and we're not going to do that today. Let's keep moving to the next one, which is PDN, which we may get some fundamentals on. We'll see what the brokers say. So we do get some broker consensus here, along with broker targets and consensus estimates for any earnings that might be down the track. So as suspected, not making any money right now, but the brokers do have them making 5 cents a share by FY 2023, so that's interesting. Estimates on growth, it's sketchy here. Okay, we've got a grand total of 2 brokers that have given us data on this, and that's why we've got so many blanks. Yeah, it's the minuses that are hurting me here. So look, I can't value it. I'm sorry for Craig, based upon the scant data we have. But let's have a look at the chart. It's one I know which was doing very well not that long ago, because I'm pretty sure I ran it in the Think Technical that we do, and that was, I guess, pre this little bit of a breakdown we've had in some of the commodities markets. Look, I still think it looks okay. Long-term trends is still up. Certainly that short-term trend's under pressure. I think if you went back to here, it's a textbook technical buy. I mean, it is, it was when I put it in as a and Think Technical, the best looking chart, I think, in the market on that day. Unfortunately, we have had a pullback in some of those big commodities, and that's just, I guess, hurt the sentiment on some of these smaller capitalisation stocks that are not yet making money but a perspective to do so. Look, long-term trend, as I said, is up. Short-term trend is under pressure. It's not good to see that we've broken through some of these key levels of support. Yesterday's candle's encouraging in that we did see obviously a lower open and then a higher close. We're seeing a lack of a follow-through today, which is disappointing. Look, a decent candle today and quickly moving back above that sort of 48.50 level, I think would be positive. Look, until the meantime, I think you're probably going to hang on to it with your exit point beneath here. So this is where the demand we expect has come in. If that demand starts to bail out, then I think we're in trouble. So that low would be 43. So it's a hold above 43 cents. A question here for COE, which is Cooper Energy, from Marco. And this was one that I did talk about on Ausbiz a while ago. And it has come down. And I'm absolutely guilty here of trying to call the low in energy, Australian energy stocks, a number of times over the last 12 months and have been wrong. And disappointed by a number of them. Cooper is certainly one that has not gone in the correct trend. So I would suggest it was 38 cents when I mentioned it, which was probably around about here. So specky buy, potentially breaking back above the long-term trend zone. And unfortunately, that trend zone held, down it went. So for Marco, look, I think we need to have, with any time you listen to anybody telling you to buy something or saying they like the look of something, in any forum, I think you need to also have your own exit plan as well, because you won't necessarily be able to call that person up and say, okay, well, do you still like it, you're still in it? And, it's probably around about here that you'd have to be tipping out of it, which is around that sort of low 30s. Once we broke down, we tried to rally and then we failed, and it gives us a little bit of an insight into what we're concerned about with Paladin. So we're really here with Paladin. We thought we had a great trade, and that's going to happen. We can't get everything right. Having said that, Paladin looked about 1,000 times better than Cooper did at that time. Didn't turn out. We thought it was going to break through the resistance zone here, but the short-term trend was up. Price action was improving. It didn't turn out. It didn't do what we thought it was going to do. Okay, and then we need to say, okay, well, it looks like we're going to get a rally. It looks like the demand has come back in. Maybe everything I thought before was correct, and this is okay. But if we tip beneath this point, I think you get to that point where all is lost, and you're probably better off recouping, in this case, 70, 80% of the capital that you started with, and going and looking at doing something better with that capital. Can I buy it now? No, I can't buy it now. Would I hold it now? I can't see any real reason to hold it, because all the trends are pointing down at this stage, and the price action is still lower peaks and lower troughs. There is some support here at 23.5, which may or may not hold, but while you're waiting to learn whether it will, I think you've got dead money here. So Marco, apologies, I've got that one wrong. There's no doubt about it. But again, you have to have, if you're going to take entries, if you can't text message that person every 5 minutes and say, are you still in it? You've got to have your own exit system. Got a couple here coming through, PME, Pro Medicus, which looks amazing. The scratchings here are probably coverage previously in Think Technical. It looks like I haven't covered it for a very long time. So yeah, look, it's an absolute hold. As for getting in, I just think the last couple of days would probably increase the probability of a little bit of a pullback, maybe into that sort of 52 zone. So I would wait for a pullback before I was to buy it. If I had it, there's absolutely nothing in the chart to suggest that you wouldn't hang on to it, because it looks fantastic. And remember, what we're looking at here is not what we think about the market. And we can go back to that last one. What we're looking at is what others are thinking about the market, the market consensus. And you couldn't get to that contrast any more than those two. Let's whack in Pro Medicus into the fundamentals. And we'll go to C3. And we do have broker coverage on that, so we'll be able to get some numbers that make sense. Absolutely hold PME. If you're a buyer, you're probably looking for a pullback first. I just think it has extended too far away from the static support, which is here, and the short-term dynamic trend zone, which is what I like to look at. The next one that Nick's asked for is VAS. Okay, so the question as to what we would do with this is really a question as to what we would do with the ASX 200. So there's probably not a lot of point looking at that chart. Let's head over and have a look at the ASX 200. Big bounce back today. Great to see. A little bit concerning yesterday, but still very much within trend if you caught my analysis in yesterday's weekly think tank. Whilst we're holding this trend, I can't see any reason why you wouldn't hold your broader portfolio, or why you wouldn't continue to target stocks that you like on pullbacks. So I'm happy with this. And therefore happy with a holding in VAS. Nick, no reason why you wouldn't hold this. And if you're looking to buy, you're really making that decision. Well, I'm not going to pick stocks myself. I'm just going to put something in my super fund that's going to track the index and give me fewer headaches than trying to follow and pick stocks. Okay, A2 Milk from John, if we have time. Of course we've got time. A2 Milk, and we are going to do a review of the turnaround stocks that we talked about a couple of weeks ago. And before I do that, John, let's head over to Pro Medicus. We do have 6 brokers that cover it. We've got 2 buys, 4 holds at this stage. Mean price target is 45.86, which is about 15.7% below the current price. So brokers' targets either are too low or they haven't caught up yet to what the share price is doing. And often we see brokers revise their targets higher as share prices go higher, so they don't look too far out of step with their targets. Average long-term growth rate of 29.8%, but certainly over the next few years, we're looking at an average growth rate of about 34%. But let's go with that 30 in here and be a little bit more conservative. Let's do an external consensus. So that's where I can go to a source of broker consensus outside of Thomson Reuters data, which is what we're looking at now. So this is Thomson Reuters numbers, not my numbers. But if I choose to go to another source, I can then put in that consensus number in there. So we're going to go custom growth on. Let's be a little bit more conservative at 30, and this does some fancy little calculations, and it suggests that we are looking at Pro Medicus being fully valued at 31.63 based upon the growth that it has. So, and not to say that this model is the be-all and end-all of analysis, but it is suggesting that Pro Medicus is substantially overvalued at this point in time, because we've got an average PE for FY 22-23 of about 100, which is not a problem if you've got growth, for example, at 50%. Then we're starting to look a little bit better. You'd have to have a growth rate of 75%. That's probably a little bit less than that, 60%, to say that this is less than fully valued, and it just doesn't have, whilst the growth is fantastic, don't get me wrong, at 30 to 35%, it's not enough necessarily to justify such a high PE at this stage. But their fundamentals, putting it together with the technicals, I can't see any reason why you'd sell Pro Medicus at this stage. Sorry for jumping around, but we'll get the A2 milk fundamentals going, and we'll see what Thomson Reuters has on that and what the brokers are saying about it. In the meantime, let's head back to the chart while that's loading up and have a look at the chart. So when we did the Turnaround Stocks webinar, it was definitely before the last profit downgrade. I think it might have been somewhere around here, and I said, look, I don't think it's time to buy yet. It has fallen significantly, but it has also had a reasonable bounce since then, and you kind of have to zoom in to get some scale because it's fallen so much that the scale does go out of whack. So yeah, I don't think I can buy it yet, just on that chart. There's some constructive points here. So peaks and troughs, we're showing higher peaks and higher troughs here. Okay, so that's positive. We're seeing pullbacks to previous supply levels acting as demand with some decent candles. That's encouraging. If this volume had occurred on a big blower flow here, I'd be more encouraged. We will have, I guess, some significant supply probably coming in around 768. We're so far away from that long-term uptrend, and we haven't even turned the short-term uptrend, turned the corner there. So look, I think it's still a pass to me, but I'm with you, whoever asked that. Sorry, I forgot now. John, look, I want to buy this at some stage. I'm with you. But like Cooper Energy, right, I don't want to do that again. I just know that last year I had this feeling that the oil price was going to rally, and therefore Australian oil stocks looked too cheap. And funnily enough, the oil price has rallied hugely, and Australian oil stocks look too cheap, right? They still look too cheap. Some of them have fared better than others. So there's what you think, and then there's what the market thinks. So yeah, A2 milk is a tricky one, because I don't think it's that cheap yet. Because growth, brokers, we've got minus 75% here, then they're expecting a massive bounce back in FY22, which maybe, probably not. This is an arithmetic average of those four numbers, and that's why I have custom growth here. So I can look at those four numbers and go, yeah, I reckon it's more like 12% or 15%. So that's the arithmetic average, and then I might say, well, what if it's only 15, or what if it's 10, or what if it's 6? Yeah, it's hard to say. I mean, there's so many moving parts that need to go right for this business. Well, let's leave it at 12. Let's leave it at 12. External consensus, let's leave that off, and therefore we're using these numbers here. So it's got a average PE for the next couple of years of 24, with a growth rate of 12%. We're currently at $6. The brokers are saying it's fairly valued. So and there are lots of brokers that cover this. To be fair, it's widely covered. We've got one strong buy, hanging in there. 4 holds, 4 sells, one strong sell. They're still not ready to commit here, and fully valued based upon the brokers. We're at $6, which puts, just based on my valuation, we're on the wrong side of fair value. So I don't think it's cheap. I think you're starting to get a good deal below $5 on A2 milk, and we may not see it. It doesn't matter what I think. It depends on what the market thinks, and I guess that's where the technicals come into it. So we're trying to marry up with what the market thinks. I don't think the market's exactly screaming a buy on this one just yet, but I can assure you I am watching it very closely, along with Kogan, along with Appen, and all the other ones. Okay, Warren's got MSB, which is Mesoblast, which is not one I follow that closely, to be honest. And we can see some scratchings in the past there, where it was in an uptrend. That trend, obviously broke. It's one of those that's a serial surprise it to the downside from time to time, and then it'll surprise you on the upside as well. Look at that there. The short-term trend has returned up. There's a decent basing pattern here. I think this is important. It's pretty good here. It's a bit like A2 milk where the volume occurred before the low. But I don't mind this. I don't mind this. I can't buy it here. It's just too early for me. I need to see how it goes with the long-term trend. I want to see it interact with that trend, and ideally, and we're looking into the future here, do something like this. Get above it. That Cooper Energy, it didn't end up getting above it. And, that's what we want to see. So I'm happy to give this one another, 60, 70 cents before I get in, just so I can be fairly certain that the market is seeing what I want to see in that. Okay, so it's a pass for me at this stage. Let's see if we've got any fundamentals on Mesoblast. And I know there are a number of brokers that cover it, so we may well get some. In the meantime, we're going to go to CXL for Hamid. And honestly, I don't know this one. Calix, okay. That looks good. That looks very interesting. It is flattening out though, so we are moving, this is that sort of clear demand side market. Demand is overwhelming supply, no doubt about it. You don't need a degree in technical analysis to see that. And then we're starting to get more, I think, towards this sort of equilibrium market where the enthusiasm to the upside is starting to dissipate a little bit. Potentially the valuation's becoming a bit stretched, and some of those deep value investors that bought it around 80 cents are starting to get out. Yeah, look, if I had it, I'd have to hold it. I'd be watching levels like this. So that low there, 251. And as a last resort, if it got below 232, I think you're starting to bail out of that one. So, 251, let's go a couple of cents below that. Let's not put it out, stop right on the support level. That's silly because markets will probe that support level. They're never fixed and finite. They're spongy. So if you said maybe a 247 or a 248 as a sort of an aggressive stop, and then if you're a bit more conservative, you want to give it a bit more room, you're probably looking at like a 229 or a 228. In the meantime, the strength of that trend would compel you to hang on to it, absolutely. If you're a buyer, I think, given that we're flattening out a little bit here, I think you'd need to wait to see, and this is a great start on today's candle, but you'd want to see a little bit more of this building into this resistance level, and that high is 295. At $3 is you often get these round numbers come into play there. So, yeah, if you're a buyer, I think you still need to see a little bit more price action coming in beneath $3. If you're a holder, if you're an owner, then you would hold on to it. Let's head back quickly to the fundamentals for Mesoblast. We do have 4 brokers that cover it, 2 brokers at a buy, 2 brokers at a hold. Their mean price target is 521, which at 220 last price gives you a fair bit of upside. What I can't see in this data here is how old these recommendations are, and they could be very, very old, hence the difference in this price target. So you can't look at this and go, wow, okay, the brokers love it, and therefore I need to buy it. We can't see how old those are. I do have other sources, but they are a little bit more difficult to get into in a timely fashion. Do we have profits? We don't have any profits here, so my model's not going to be able to value this, so ignore any of that. That's why these are all negatives. So I can't give you a fundamental, unfortunately, on that one for Warren, because we're not making money at this stage. CXL, I'm very curious actually. CXL, it's not one I'm familiar with, so let's see what fundamentals we do have, and that's why I like doing this as well. I might find something I didn't know about that looks fantastic on the fundamentals and the technicals. We've got Santos from Craig. Certainly know what they do. And we've talked a little bit about Australian oil stocks today, haven't we? I wouldn't say I've been terribly wrong on this. I mean, I have called it a buy now for about 6 months, so I think we're ahead. So I didn't get all the oil stocks completely wrong, but it probably hasn't done as well as I would have liked. And you can see that from the flattening, significant flattening of this trend. Look, I'm still a holder, I think, Craig. I can't see anything in the chart that would suggest that I shouldn't hold on to Santos at this stage. I think if it gets through 780, it'll do $9. I think there's plenty of support in and around that sort of 650 to 7 zone, as long as it's holding that up, long-term uptrend, the dark green zone, that I'm happy to stick with it at this stage. Let's have a look at CLX. We do have some broker coverage here, 3 brokers covering it. They've got a mean target of 296, which gives us about 15% worth of upside. That's not too bad. We aren't making profits just yet. So again, I can't give you that fundamental valuation, but if anything, you can very quickly there, I think it was Hamid, you can see what the brokers think about it. At least they have a target of $2.96. While we're here, let's type in Santos, because I know it is widely covered by the brokers and we're going to have plenty of data to look at there. Okay, so that's still retrieving. Let's head to Gold Road, which was looking great, of course, until the gold wipeout. Let's start with gold. Let's have a look at the gold chart. A little bit of a bounce last night off that 1755 level. Again, if you caught my analysis yesterday morning, we were looking at this level as a point it could bounce. This rally was promising, but in my opinion, never really got going to the extent that you could get too excited about it. I'm concerned that with the nature of this decline, I mean, it looks similar to that, right? It looks similar to that, that we could well just be seeing another sort of peak within this broader bear market for gold. 1755, if it holds here and heads back up, then hopefully I'm wrong about it. If it breaks below 1755 and then 1677, you're just going to see this long, slow, drawn-out decline for gold that could go on for a very, very long time, maybe even into sort of somewhere around here. So it'll be a slow death if it is. If I'm wrong, then we're building new areas of support for potentially an uptrend. But it's all about, inflation, not inflation, interest rates going back up, not going back up, and that's all too hard. That's all way too hard for me. Yeah, so let's have a look at Gold Road. So we've got some context, I guess, behind the gold stocks. Now, the thing about gold stocks is that putting aside that gold chart, they're looking really, really cheap, just from their cash flows. And Gold Road does have significant positive cash flows. Look, long story short, it's not great when we see this sort of trend developing, but it's all very slow and steady too. It's not a rapid decline, and we are interacting with some demand points. I mean, there's an area that we would expect here to be demand, and then there's that long-term trend. Yeah, look, I think I'm happy. Look, I'm happy to hold Gold Road on the basis that it's going to be well supported here, but is there a great deal of upside? It's not really screaming that on the chart. It's at best a hold. Looking at Santos, we obviously do have some profits here. Let's keep external consensus off. Custom growth. This is an arithmetic average, so you need to be sensible about this. So let's turn that off. Turn that on, and let's go. Look, just from what I know about oil companies, I think you have to be really conservative about these, and you're going to go as low as that. And this part here, and this is why fundamental analysis is very subjective. Beauty is in the eye of the beholder. What growth rate do you apportion going forward? But nonetheless, it still puts Santos at somewhere around about great value, in my opinion, based upon the fact that it's got some growth and fairly reasonable PE at this stage. So backs up my conclusion before about Santos, which is it's certainly a hold if you've got it. Let's check out Gold Road while we're here, because we do have some coverage on this one. SYA, which is Sierra Resources? No, Sayona Mining. Big dip today. What we might do is I'm going to refresh my data in the background. You won't see it, but we'll get another update. Today's not great. You don't want to see those when you've got these smaller stocks. A little bit of a bounce. You can see it interacting with that short-term dynamic trend zone. Obviously, the update came through, so we went from a fuller black candle to a less full black candle. And we really, actually, look, to be fair, you really shouldn't be looking at that last candle because the trading session isn't closed, and that's the key with candlestick analysis. You never assess a live candle. So putting the last one aside, it looks great, but we can see the future a little bit here, and the wipeout today. There's a bit of volume in there, so there's a little bit of panic. Look, it's all about where it closes today. So that is for Bippen. If it closes towards 6.5 cents, then that's very positive. Basically, whatever made it sell off today, I don't know the reason, the buyers were waiting. So that's nice. When you think about it, buyers are waiting to buy my stock on pullbacks. So what we'd want to see, Bippen, is the candle you've seen me draw it 1,000 times. If it looks something like that by the end of the day, okay, so if we get this in here, and then really that volume is telling you that the weaker hands spilled out, and that selling was met with the strong hands buying. So let's see where it closes. Look, on the base of where it closed yesterday, yeah, it's absolutely a hold. And I would have told you that if you were looking to buy it, then expect a bit of a pullback, given it's had a great run into this short-term dynamic trend zone, which is kind of what it's doing now anyway. I like the volume. I think there's plenty of interest in this one. So I'd be happy to hold it. If we get this big black candle today, then that's not great. It just means that people are getting out and the story is probably over for a period of time. So that would be more concerning. So keep an eye on that one, Bipin. We have Northern Star, and then I think I've got to them all actually. Head back to here first, Gold Road Resources. When we look at some of the other numbers here, the PE is actually, look, it's higher this year, but you can see it's dropping significantly because the PEG, so this is its growth compared to its value. That's what this measure is measuring. It's actually really good. Anything less than 1 is fantastic there. And apologies if I didn't look at some of these other numbers for the other stocks. I guess I'm rushing, but dividend yield, at least it's got one, and it seems to be improving. Price to cash flow, they're good numbers. Return on equity, that's better than market and significantly better than market in FY22 and FY23. So this, it's got some really good numbers here. Brokers are expecting a big year in FY22, and it's hard to say. What's the gold price going to be? But there's growth in there, and I'm almost happy enough to go with what the brokers are saying. And with that off and that on, you're looking at 140. It's bargain, and this is the conundrum I have with these gold stocks. I'm not bullish on the gold price, and if you've been listening to me the last few weeks, you've heard me say I'm not all that bullish on the gold price, but gold stocks look crazy cheap here. So what do they do? What are gold shares going to do? Are they going to go up because they're so cheap, or are they going to just muck around and just go sideways because the gold price is probably flat to trending lower, and they're so cheap? That's the question you have to answer for yourself, I guess. We've got another gold stock to finish us off today, and we might end up seeing some very similar numbers probably for Northern Star. And while that's coming up, let's head over to the Northern Star chart. I did cover a few gold stocks over the last few weeks. I know I covered Regis. I know I covered Gold Road. West African I think I covered, and they've all pulled back. I haven't covered Northern Star. It never really looked the goods. And you can see why here. So you can see it never really got back above that long-term downtrend zone. It interacted with it and it just failed, and it's pulsed back down again. I can't get excited about this. I can't buy it. That's straight out. I know that for sure. And if I had it, look, it depends on how much pain that you want. I guess it's just what's your pain threshold? Because I guess as long as it stays above $9, it's okay. Geez, it could be a long time before this one starts to look good again. That was for Nicholas as well, one of Nicholas's clients. Well, that's it. I've gotten through the whole list, and we're certainly up there on time. So I might head back to the slides and do the usual close with the disclaimer. We do have some new info here on our webinars that are coming up. So if you'd like to head over to the webinar page where you registered for this webinar, and we're going to have a crash course in crypto next week, and it really is, I guess, an introductory course for those who are very new to the space and want to know how to get involved. And it's probably a good time to do it with crypto crashing, for want of a better word, because I think there's so much more to go in that universe. I think really we're closer to the beginning, and we're certainly nowhere near the end of how this is going to change financial services and just the way we interact with technology more broadly. So great time, I guess, to get your teeth into it. And then we'll be reviewing those turnaround stocks that we discussed earlier, and I'll add another one. Not sure what that is right now. If you've got any ideas on something you'd like me to cover as that +1, certainly let me know. Ask the Experts we won't be doing one in a fortnight's time, because I've got that day off. I've got a little bit of leave coming up, and then we'll pick it up the fortnight after, so apologies for that. And then I've just added one, the Turtles trading strategy, which for Marco, I think you've got to get a strategy for everybody. You've got to have your own strategy. Don't rely on me. Don't rely on any expert to tell you what to do. Build your own strategy, a strategy that you like, that suits you, that you've got confidence in. and trade that strategy. Okay, I'm not trying to put myself out of business. I'll always be here to support you and give you ideas, but then, use your trading strategy as a filter, to determine how you're going to behave in the market. Never be somebody who doesn't know what they should do because you don't have a strategy. Okay, the strategy now is to read the disclaimer. Well, it's for you to read the disclaimer, and I'll let you do that in your own time, but they do make me say that everything we've discussed today is general advice. It's just ideas. You need to make the decision on what you're going to do before you do it. They also make me say that Think Markets is a regulated Australian broker. We do have some products that could see you lose more than your deposits. If you have any questions, of course, please give us a call. That's the type of broker we are, okay? We want to help you achieve your goals. That's it for me today. Hopefully you got lots out of it. Until next time, all the best for your trading. Bye-bye for now.